Welcome to a breakfast with Michael Moore, Director General of the British Private Equity and Venture Capital Association. I am Luisa Alemany, Associate Professor and Academic Director of the Institute of Innovation and Entrepreneurship. Many of you know me already, and hopefully I will know some of you in the fall when we are all back in campus. Welcome everyone, and we have at least signed up more than 300 people that will be joining us for the session. So we are very, very happy to have students, alumni, but also people that will be joining in September. So some of the admins, people that are thinking about joining, some staff and faculty. Michael, well, thank you, Michael, for being here with us today. Michael has a very long history and career. Over the past 30 years, he has operated at senior levels in both politics and business. In his political career, he was a member of the parliament for 18 years. And over the course of his parliamentary career, Michael's focus was primarily on business, international affairs, including the European Union and Scotland, which he is currently based. After the 2015 general election, Michael became a senior advisor at PwC, working with boards and C-suite executives on the strategic implications of Brexit and other political issues. Finally, he joined the British Private Equity and Venture Capital Association in August 2019. So welcome here.
Luisa, thank you very much indeed, and good morning to everybody joining us for this webinar. I'm really grateful for the opportunity to be with you and to share with you some thoughts about the state of private equity and venture capital here in the UK, perhaps a little bit more globally as well, and to reflect with you in the discussion that will follow on what your concerns are, what your hopes are. And it's fascinating to see how many of you already are focusing on this sector as a career option. Just as an aside, I was thinking about the part of the business school that's sponsoring this work and this particular webinar this morning. I think back 20 years or more, and I met an American. I was a young member of parliament at the time. I promise you I was young in those days. And I met this guy who was a professor of entrepreneurship. And to a British ear, that sounded very strange. The British attitude quite broadly was entrepreneurship you were born with, you had the personality, the character, the drive, whatever it was, and you were probably pretty smart as well, it's got to be said, all of that. But the idea of this as an academic subject, well, happily, 20 years is a long time, and since then this is a much advanced discipline, and London Business School is a great place to be focusing on it, and so I'm delighted to be associated with the school in this particular regard, and also just to recognise the work that the school does, study of venture capital and private equity. Now, I have a few slides. I promise there are not too many of them, and I will get through these reasonably quickly so that we can get on to the perhaps the more valuable bit, which is just the interaction and the questions and answers that you wish to pose. I've styled this private equity and venture capital in the changing world, but maybe just a moment's reflection on where I've come from. As Luisa pointed out, I spent 18 years in the House of Commons, a member of Parliament representing a constituency in the south of Scotland. I was a Liberal Democrat MP, and to this day I still live here in the south of Scotland. The technology that we're using to talk to one another, the issues we're covering today are so different to what they were when I was a member of Parliament. But the biggest change is the way in which the government is having to grapple with huge challenges that are not immediately in its control. And think, of course, of the tragedy of COVID-19 that has afflicted countless families up and down the United Kingdom. But I appreciate this is a very international audience, and you will be thinking of friends and family and loved ones all over the world who have been caught up in this truly awful recent crisis. I was not just a member of Parliament, but served in the coalition cabinet for 3.5 years. We thought in the aftermath of the great financial crisis, with the looming challenge to the public finances, the fact that the whole of the UK economy seemed to be knocked off its stride, that we were facing the biggest challenges since the Second World War. Candidly, what has happened since, perhaps both in terms of the difficult politics of the Brexit process and now the unprecedented challenges of COVID, are things that were unimaginable to us then. And so across the political spectrum, regardless of one's point of view, I think we can all recognise that all the policymakers we're dealing with, all the public who we need to engage with, have got a whole different set of priorities to ones that might even just have been the case a few short months ago. And some of those themes I'm just now going to explore, if I may. I'm going to start by just giving you a little flavour of what we do in private equity and venture capital in the UK. You see that nice big bold statement there. The sector contributes significantly to the UK economy, and it's brought to home the scale of that by the fact that there are over 4,000 companies in the UK that have venture capital or private equity backers. That is a hugely significant number of companies. And when you then look at how many people are employed within those companies, you can see that, in employment terms, the sector supports a huge chunk of the United Kingdom's workforce. Really important, and a point that we regularly discuss with policymakers, be they in Parliament, members of Parliament, or around Whitehall in terms of civil servants and ministers. But it's 800,000 people across the whole of the United Kingdom. So again, at a time when the focus in UK politics is on reaching out to all parts of the UK, levelling up, you'll hear the Prime Minister talk about, we as a sector can proudly look to the fact that we have got companies employing people the length and breadth of the United Kingdom. And that, of course, is true of pretty well any other country in Europe or North America and many other parts of the globe that one might mention as well. Now, in terms of how much that represents in investment terms, over the last 5 years, the sector has invested something like £38 billion in British companies. Again, a not insubstantial sum, and that's across a vast array of sectors. So there are specialisms in the venture space, of course. Tech, deep tech, healthcare and the like are very popular. But around the country, there are very few sectors which will not have had some input from private equity or venture capital in that time. And that obviously builds on trends that have been established over many years. Why do we keep attracting the investment? Why is this an area that you yourselves are interested in contributing to? Because of the performance. The outperformance of the sector is something that is clearly attractive to institutional investors and the people who depend on the returns they generate. So whether it's pensioners up and down the United Kingdom, in North America, Europe, wherever they might be, or others, these returns really matter. And particularly in recent times, they have been very attractive when we've seen yield so hard to find in other asset classes. But of course, it's an area which attracts quite a lot of scrutiny too, as recent debates in the media have highlighted. And I'm very conscious with an expert audience like this that you'll know rather more about this, I'm sure, in technical terms than many people, and will have your own views on all of that. When we are talking to our stakeholders in government, and this is obviously something that is a big focus for me, considering my background, which, as Luisa pointed out, I hope it shows that I neatly straddle both the business mindset and political mindset. The things that are attractive and important to parliamentarians, policymakers in government, whoever they might be, are these three big areas. It's the fact that our investment is long-term. Now, we can debate what we mean by long-term, but compared to many of the stakeholdings in the public markets, what a private equity or venture capital firm will do with its stakes is indeed, in 3 to 7 year time horizon, a good long-term investment. And often only one of many that they will be making over the course of their tenure or other funds. And increasingly, the model that is developed around the industry is very attractive to other people to see too. The active engagement of the private equity businesses in the companies in which they invest is a huge selling point. It's attractive to those who receive the investment, and it's hugely important to those who are looking to see how those businesses are run. And of course, investing responsibly is something that should never have been put to the side, but is certainly right in the front of everybody's minds at the moment. And I think that that's an area where increasingly we have got the metrics and that we can show the examples of how we're able to do that. The second theme is of building businesses, employment and returns also matters to our stakeholders. You know, candidly, if one is talking to a member of parliament, and I remember this from my own experience, if you are being talked to by somebody like me in a trade body, you're being asked for support on something, lobbying in some people's books, we prefer to call it advocacy, then the fact that businesses are being built up, that employment is being created, and that returns are being delivered, increasing returns are being delivered for pensioners and other stakeholders in the investment over time is really, really important. And I think of a local example that I know of, where a business that I had known in my first part of my career, so I'm a trained chartered accountant, qualified back in the early 1990s, trained with what was then Coopers and Lybrand, which really shows my age, which of course became part of PwC in due course. And one of our clients was a family-owned business which dealt in an important commodity in the UK economy, and had ambitious plans to scale up over the course of its next 5 to 10 years. The truth of it is those plans were thwarted, although the business continued to be run highly successfully across the whole of the UK for 10 to 20 years. It went through different teams of management, but the family shareholders were still there. Recently, the family having made its decisions, it moved to, it sold to a private equity business. And that private equity business were able to be persuasive to that family because they promised, and they could demonstrate from their track record, they had a great ability to build businesses further. They weren't there with the old-fashioned idea of some private equity people, perspective of them, that they would sell off the assets, run it on a financially engineered basis alone, and then move on to the next acquisition. Their vision was to build the scale of business that the family had never quite been able to do, and that was an important part of the reason for the transformation. And it's going to be very exciting because I still know the business not very far from where I'm sitting today, and I will be watching that carefully in the years ahead. The last of those themes that's put there is fundamental. Let me talk or focus initially on the innovation part. In the United Kingdom, we have had world-leading academic institutions. You are part of one yourselves for centuries, we can boast, but certainly in recent, more competitive global times, we've proudly seen that institutions, be they in London, the Golden Triangle, elsewhere, here in Scotland, wherever they might be, they have been world-class and maintained that position. One of the important aspects of that is in terms of innovation. And we've seen that the science developed in the UK for generations was something that, you know, in the cliche, was exploited by other people. Actually, in recent times, we've begun to see through venture capital and others that academic work, that science, those discoveries being developed here in the UK, and that requires a sophisticated investor base with the funds that are able to partner with the academics and other entrepreneurs to develop that in a way that is useful, not just to the communities in which they're based, but to the UK more broadly. And that's very, very exciting. And certainly when I took on this role and talked to senior officials in the Treasury earlier this year, this was the bit of what I represent in the membership that they were initially most focused on. And I think that's really going to continue to be a really important part of what goes on in the future. The other bit of that thing, and I don't want to duck this, is about diversity and of talent. To be frank, we've not been good enough at that in this sector. Here I sit, a white middle-aged bloke who representing the industry, and that might, I'm afraid, at the moment be something that is a pretty fair reflection of large parts of the industry. But it's not good enough, and it's not something that we are going to accept at all going forward. We've seen in recent weeks the huge and rightful outpourings of anger about what happened to George Floyd in the United States, but then a much broader debate about the role of diversity within society across the whole of the world. And in here in the UK, that's of course included a focus on what's happening in businesses. We don't have enough people from BME backgrounds or enough women in the sector, and working with Level 20, who promote the involvement of women within the sector. We are shortly going to undertake our biannual survey of the sector with a view to providing ourselves with the more up-to-date figures and make sure that we continue to advance this agenda. Now, we do all of this. We claim our position in the world on the basis of the immediate challenges, but for all that COVID has dominated the last few months of our lives, none of the other issues, and I touched on diversity just now, that were changing the shape of our economies and the societies have gone away. If you look at the way in which the public has been engaging with business in recent times, they are rightly more demanding on the subjects of climate change. They embrace the tech revolution, but there are challenges associated with it about the future of existing types of jobs, or what it will mean as some people are included in tech revolution and others are apparently locked out of it. The demography of our countries are changing, and certainly here in the UK we have a rapidly aging population, and that can, from a sectoral perspective, offer some opportunities to get involved in some innovative new ways after older people, but it also brings scrutiny to do with demography, or the way we look after our older people in social care homes and the like. But more broadly, we can see that economic power keeps shifting. Is it all shifting to the wealthiest? Is it all shifting towards Asia? These are anxieties that are debated in a lively manner in all parts of both the developing and the developed world, and are surely providing a huge backdrop to how our sector will develop in the next few years. Right now, of course, and that last point is key, we are really trying to navigate our way through the crisis and get to the period of recovery. We've spent a very busy few months working on what needs to be done to support our different members and the companies in which they are invested. And if ever there was a moment where a trade body needs to earn its keep, it is right now. But in doing all of that and thinking of all the issues that are before us, the thing that I am talking most to our members about is the scrutiny that we are under and the need for us all to be able to earn our place, to have the license to operate as the private equity and venture capital sector maintained. I would like to think it can be enhanced. But we will need to be able to demonstrate to people that we don't just generate economic value, that is our natural currency, as I say there, but we perhaps need to be smarter at the way we express that and explain it. But social value, be that ESG, be it purpose, however you wish to define it in its many forms, is critically important too. Consumers are demanding of us, parliamentarians expect more of us on this front. It's not simply good enough to deliver on the economic metrics. We have to be much more conscious of our corporate responsibilities more broadly. And those two components are critically part of public value overall, which I think is the key to whether or not we are going to earn our place for years to come. We can never take any of that for granted. Last thing I just wanted to touch on is what our role in the BVCA is. For those of you who join one of our member firms, you will quickly become more familiar with us, because one of the critical things that we need to be is the centre of excellence for all of the sector's thinking, and we do that through a series of committees, technical committees, platform committees of the different sectors within the industry, but also through our events and training. And the training that we provide, the foundation course, is something that most of the leaders of today's private equity sector in the UK have been on and still speak fondly of, I'm pleased to hear. But that centre of excellence, that best-in-class networking forum, those are the ambitions that we aspire to maintain. But it's not just about serving members. We also have to ensure that on their behalf we connect to stakeholders in government. We can show that public value contribution, and we can meet their expectations of how we deliver for the economy and the wider society. It's a very, very exciting time for the sector. It's a very challenging time. Those two can often go hand in hand. I think that we will, with care, but with our ambition as we have it, ensure that we're nicely positioned to work to deliver the great results that we have done for a very long time in the sector for many more years to come, but also be a full part of what is developing in the UK and more widely about how we help the country as a whole recover from COVID and then reset things for the future.
Okay, thank you, Michael. Super interesting. And we have a lot of questions here, but actually it was very funny when you mentioned this thing about the academic 20 years ago working on entrepreneurship, because many people think that entrepreneurship as a field of research has started like 5 years ago. But in fact, I attend a conference every year, which is on entrepreneurship research, and this year was the 40th anniversary. So at least for 40 years, we have been having this conference on entrepreneurship research. Very interesting, everything that you have been talking about. I was very, very interested about diversity, that maybe we have more time to talk about it, and also the social values that are coming. In fact, when I did my PhD dissertation, also many, many years ago, was on this topic, on how much was the economic value for the society of venture capital and private equity, because I work in the sector and I knew that the people investing in the sector were making money. That for sure I knew, but I didn't know whether this was good or bad for the economy. And so that was the purpose of my dissertation. And the findings were very, very interesting, both for venture capital, which clearly everybody knows is positive, but also for private equity, including leverage buyouts that are being attacked so much. But okay, I'll leave it there. And I'm gonna start with a question regarding the situation right now. And I have a lot of questions that I'm gonna be passing from the students. This one is from me, which is, what is happening right now? How are your associates feeling with the current pandemic situation? Because I look at the numbers for venture capital, which is what interests me more from the entrepreneurship perspective. And I was very surprised to see that if you look at the numbers of investments from the lockdown, so mid-March until now, the amount invested in US, Asia, and Europe is basically the same amount that last year, same period of time. The only thing is that healthcare has more investment, B2B, so investments going into software for companies. I mean, companies have probably stopped investing. So that one is the one that is going a little bit down. But other than that, I don't really see the numbers going down in venture capital. So what's happening in private equity?
Well, I think that I will defer to your, perhaps closer study of some of those numbers. But I think that the same is true of both parts of the sector, in that for businesses and funds that were looking at opportunities in the tail end of last year, finishing fundraisers, getting themselves ready to deploy the capital in the early part of this year, a lot depended on how far through the due diligence process they had gone before they were deciding whether or not to proceed with the deal or not. So in venture, when you see healthcare, there's a lot of interest in all the kind of COVID-related issues that can be supported by breakthroughs in science, medication, medical devices, whatever it might be. And so it's not surprised that those who've got perhaps the clearest view of where the opportunities lie will go after that. What I've been conscious of talking to members and people in the industry more generally is where the due diligence hasn't been possible with new teams, it's been much, much harder. And it's a really important dimension to what we do that needs to be understood. For all the tech that enables us to do this very event this morning, or do months now of meetings over video conferencing calls and so on, for all of that, this isn't, business is intensely people focused, and to know a person requires you to have done it more than just through a small screen like this, and to be able to make pretty big investment decisions requires you to really understand the people in whom you're investing. So I think that while the early signs of this year are very encouraging, the really interesting follow through will be what happens in this next quarter and beyond, where the deals that were underway in the early part of the year are replaced by fresh starts. And people are looking for workarounds. People will probably learn to make judgments about people through a Zoom lens rather than face to face. But for follow-on investments, for investments in sectors that people know really, really well, more likely. But for new areas, new companies and so on, I think that could be quite challenging.
Yeah. Yeah, I was now remembering due diligence. I mean, when you are buying an industrial company, you need to visit the factory. There is no other way around apart from talking to people. So probably that will take more time. Now I have lots of questions. So I'm going to jump into the questions from our audience. And some questions are referring to getting in the sector. So how do you get a job in venture capital and private equity? So what type of backgrounds they need? What will be your recommendation for them? Maybe like if they have to do a summer job, or how can they maybe start as an intern in some of these companies? Actually, can you give us a sense of what is the average number of employees in your associates, or how many people working on average in venture capital and the private equity funds that you have in your association?
It's actually very small. It's very, very unusual to have even some of the bigger offices with as many as 50 people in them. And you get lots of very small teams working very, very hard, very, very motivated to do so. And so that can make it slightly more challenging to get the opportunities. Now, there are a whole range of entry points. A lot of people in the past have done it via banks, so they have initially worked their way into the different parts of some of our bigger international banks, all of whom are well represented in London in particular, but elsewhere in the UK as well. And they've also gone through some of the big consultancy businesses. such as PwC, where I come from, or EY, Deloitte, and KPMG. But those are not the only routes in. And I've been interested in the last little while, not least because of the diversity challenge that I begin to hear, encouragingly, more of the firms talking about direct entry for graduates and others. They've tended to take in people who are a little bit more experienced, but there are the beginnings of and openings there. I think the truth of it is that when networking is always critical to this, getting known or getting some relevant experience. It wouldn't matter what type of job somebody was interested in. I got involved in politics 35 years ago, but I'd done a politics and history degree. I had been involved in university political clubs. I got a job as a researcher, and that research role, even though it was 8 or 9 years later before it was relevant again, was an important part of my credibility as a political candidate. I'm not saying there's an exact analogy for people getting into private equity and venture, but knowing people, working with them, demonstrating the skill set they need. And I hope that it will be opening up a bit. I hope that the experience of this cohort of students is going to be certainly better, and a wider range of people will get the opportunity to come into the sector as it continues to grow.
Thank you, Michael, for that one. I'm gonna ask you now about moving into the problem or something that was going on before the pandemic, that was the Brexit. And I have a question here about how is the collaboration of your association with the European Venture Capital and Private Equity Association, Invest Europe. So how do you work together? And what is also, how because a lot of headquarters of these funds are based in London. So I don't know what's going to happen with the Brexit. What are your thoughts on that?
Yeah, it's a hugely important subject. I mean, as you mentioned before, I spent best part of 4 years at PwC looking at this on behalf of clients there. And the role then was to try and demystify the politics, because, it's crazy times in the UK. One might argue there's an element that's continued, but where the Brexit process would end appeared to be up in the air. And I spent a lot of time with businesses, just helping them understand what the likelihood of particular outcomes was, debunking second referendums, which I never believed would happen, and so it proved, but also shaping up what type of outcome we would get. The advantage we got now, to the extent this is an advantage, is that we've got much greater clarity about what the outcome can look like. So here we are in the middle of 2020, and we've got the government saying that when we get to the end of the implementation period, as they call it, or the transition period, more popular known, then that will be it. We will leave the EU without any extended transition, and regardless of whether or not we have got a trade agreement that takes us beyond what trading on World Trade Organization terms might mean. Now, WTO terms are very, very basic indeed. They just involve ensuring minimum trading standards between members of the WTO, and they're mostly focused on the transport of goods. We've got two levels within the association that we are very focused on. One is the firms themselves and how they can do their business, as you mentioned. And secondly, how the portfolio companies in which they are invested, which typically from London can be on either side of the channel. People don't sit in London just to invest in the UK, of course. And that has been a subject of a lot of coming and going between us and government over the last few months. I am, specifically to answer the point about Invest Europe, we have worked very, very closely with them. Eric de Montgolfier, who's the new CEO of Invest Europe, was appointed just shortly after I was appointed last year to run the BVCA. Eric and I have had a whole series of discussions ourselves. Our teams are focusing on this most weeks, and we are on a shared agenda because essentially for businesses and firms in Europe, they are dependent on a lot of funds that are raised through London. and they want that to continue, particularly in the venture capital space in Europe. London-raised funds are hugely significant across the continent. So this is actually a point we've all made, us to the UK government, them to the European Commission, is look, there's actually shared interest here. Nobody's competing with one another. There's no we can win big by excluding the UK from the rest of Europe, and there's no sense in the UK community that there's any advantage in not being able to do business across on the continent. Now, we might be aligned on that. Our challenge is to get the governments, the negotiators, to see it in that same way. And as things stand, I'm afraid, it looks pretty bare. We've not yet had the negotiation focus in the area we need it to. I mean, I'm reasonably content with what the UK government has offered as its draft text for the final agreement. Unfortunately, the European version of the text doesn't quite match it. So whether it's access for investors, whether it is the management of investments, it's the ability to travel, all these basic things still need to be worked through. And we're going to have to see a lot more focus and energy applied this in the next few weeks if we really lift ourselves from what at the moment looks like a fairly bare deal at the end of the year.
So I have a question here, which is a bit different. It's regarding corporate venture capital. And so the question is, what is the role of corporate venture capital in the UK? I don't know if you have any members in the association, and if you can talk a little bit about it, and how do you see this going forward?
It's interesting because it's become a bit more of a specialism. I'll be open with you. I, before getting immersed in the sector more than I had been when I got into this new role, hadn't spent a lot of time focusing on it. And it's still a relatively small part of our membership. Most of our members are in the the more traditional parts of the ecosystem, from the large buyouts through to the smaller venture players, with all in between. Corporate venture is really interesting because it's quite an interesting mindset for a big corporate player to put some funds around something and to either to advance R&D or investment in areas where they are interested, but don't necessarily have the internal capacity, want to spread out into the broader intellectual kind of arena, using their often fairly substantial investment funds to get stuff started. And I think so. They have an important role. Our job as an association is, like all members, to ensure that anybody who wishes to do that can meet our code of conduct, can meet our entry requirements, and actually is doing private equity and venture capital stuff. So we have some kind of interesting discussions, but it's a sector of the membership that I think is really, really interesting and potentially could grow quite significantly in the years ahead.
Okay, I have a very specific question here about basically fundraising and starting the new venture capital fund. So the question say, how should one go about raising capital and starting his own fund in terms of credibility, networking, and access to deals if you are a CFA, financial engineer, have entrepreneurial experience of 5 years in manufacturing and 2 years in equity research? So very specific, but actually, Michael, can you let us know a little bit what are the typical requirements to start a new fund, and how does the process look like in the UK and maybe in Europe?
It's an interesting mixture of different requirements, and it sounds like the questioner has got quite a lot of the basics in place. The individual, their background, their credibility, their experience is really, really important. But if you're going to make a pitch to an institutional investor and ask them to invest in a first-time fund, you have to have a very compelling proposition, because there's no shortage of well-established, highly experienced asset managers there who, amongst them, will cover many, many of the fields. So knowing what the institutional investors' mandate is for private equity and venture capital, knowing how much they want to allocate into particular parts of this particular sector. So, as with everything, know your customer is an important starting point, and know yourself as part of that, because hugely talented people with actually some really interesting experience need to be able to show that they have a broader team with them that have all the different skill sets that will make the fund credible and actually make it able to launch and not forget all the complex regulatory requirements that are out there from the Financial Conduct Authority and so many other areas. So the jigsaw is a complex one, and often I think the challenge is for individuals to make sure they've got all bits. Yes, a strong proposition, a charismatic, experienced leadership team, all of that matters. We, actually run emerging manager forums ourselves just to help share the experience of people who've done it the hard way, been there, seen it, and succeeded. And I appreciate the question. It's a very rewarding road when you get to the end. It's quite a long, twisty road to get to those rewards. And certainly, it's an area that we want to encourage more of. And it's clearly London Business School is an area, is it somewhere that will produce lots of people keen to do this, I'm sure.
Okay, thank you for that one. I have a question now going back to the social values and impact. And so basically the question is telling us if you are doing something about ACG, because there is a lot of talking about it, but there is also a feeling that there is a little bit of, greenwashing justification from some people. So what are the steps that you are following to make sure that there is transparency? How do you see this space developing?
It's a really important challenge there, and I think that it's one that the whole sector and the whole of the corporate world would recognise. If we're going to be serious about environmental and governance issues, we've got to make sure it's not just, as the questioner said, greenwashing. And within the association, we have a whole series of forums where people gather together. That might be the different elements of the sector, so venture capital, growth capital, the mid-market, and the larger capital, the global capital buyout groups. We also have a series of technical committees, be it for tax, for legal and accounting, and for broader regulatory issues. Also have a series of committees who focus on particular areas, and we've got two, one on responsible investing and one on impact investing, who are really leading some fascinating debates and putting a lot of pressure on themselves, on us, and wider membership to be thinking on these issues very, very seriously indeed. I think we've got, without being too simplistic about it, there are a range of opinions about this, not just in our sector, but across business and society more broadly, that some people, get up and the first thing in the morning, they want to earn a profit, and if they do good on the side, that's great, and they're more conscious they need to do that good stuff too. There are others who get up in the morning to do good stuff and the profit on the side, that is a bonus and obviously something they want to do. The sweet spot is where those two mindsets meet. Sweet spot, not intending it's the best place to be, I don't make a judgment on that, but where I think increasingly the center of gravity lies. And there people are focused on what is it that society is changing? What are the attitudes that are changing that we need to be aware of? How do we make that part of our business? And at its simplest, people might say, well, what's the regulatory cost of not doing this the right way? There's a kind of opportunity cost to this. We just don't want to get caught out. And candidly, that can be a mindset that sets up people to ensure they avoid the costs of it. I don't think is enough anymore, and I think that the mood is shifting. It certainly matters that people understand where the regulation is going, and the EU is moving into this space very, very proactively. They're publishing new regulations. The new Parliament is way more focused on this issue than it's ever been before. And even though we're leaving the EU here in the UK because of our investment profiles, because of the fact that the EU, the shadow of EU regulation will influence policymakers across the globe, I think we'd be daft to ignore it. So the regulatory thing is driving it. But increasingly, customers, clients are on this agenda. People want to understand where stuff is coming from, how it is made, how the people who made it have been treated. And as one of my senior members put it to me, the customers will get you long before the regulators do. So if you didn't get motivated because it was the right thing to do, you really ought to be motivated because it's the right thing for your business. I don't judge the motivations or the starting points, but I don't think that any greenwashers will be caught out in time, and we've got to engage in this very authentically. While, and let me just add this one small caveat, not being unrealistic about what's possible in the here and now. I think it's another one of these journeys that we're on, but I think the speed at which we're on the journey is getting faster.
Yeah, I guess what you said, the customers, they know everything these days, so probably that's what is going to be the driving force there. I have a very interesting question as well here on diversity. So you have mentioned the work that has been Level 20 has been doing on gender specifically. And the question here is if there is something done regarding ethnic diversity and what are the, if there is something to be done and what are the measures that are being, probably this is something being discussed within, especially now, as you mentioned, this last weeks with everything that has been happening.
The diversity and inclusion agenda has been central to the BVCAs, priorities, strategic priorities for some time. So my arrival has not changed that, but we reaffirmed that earlier in the year when the board agreed the strategy refresh that I brought forward. The tragedy of what happened with George Floyd and the spotlight that threw, not just on what was happening in one particular part of the United States, but much, much more broadly, has just brought the issue to the fore absolutely appropriately. Level 20, you're absolutely right, of course, is focused primarily on gender diversity. We've not announced this publicly yet, but if I may, in the confidence of the 300 or so people here today, just say that we have partnered the BVCA with Level 20 on surveying the sector 2 years ago. We're doing a fresh survey which will be undertaken in the next couple of months, and we've agreed that it needs to be broader than gender diversity. It's looking more broad at it because we don't have enough of the data, we don't have enough of that therefore to really get to the core of the issue and challenge ourselves much more broadly. But as the Parker Review, looking at board representation more broadly, the Women in Finance Charter, whose 3rd anniversary review was published yesterday, have focused. These are living, breathing issues that we've got to be part of the leadership of, not the followers.
Okay, well, we have really lots of questions, but we don't have a lot of time to cover all of them. Maybe very quickly on the support to startups, how your involvement with the packages from the government, the relief packages, your involvement and what do you see? Because the original package of 250 million, I mean, is kind of peanuts, if we say so. I think the money ran out in 3 days. Just to compare with France, that they put 4 billion on the table and also the money was out in 1 week. So do you know a little bit more and what is the way forward on that?
Yeah, we were heavily involved in the creation of the Future Fund, which is where this money has been funneled, and there was a lot of coming and going in the early stages of the process to get that designed correctly. We, spotted from the outset. We said that this would need to be done in tranches, and that there needed to be a starting pot with the promise of more. And we were pleased when the Chancellor agreed with that. It goes back to the point I made earlier on about this is an area where policymakers and politicians don't need much persuasion that there is a big issue for us. And particularly for early stage venture businesses, venture-backed businesses who can't access bank support in the way that other parts of the economy come, it was really important. You're right, we've bumped up against the ceiling of that first tranche pretty rapidly. Figures only this week have shown that the approvals are now pretty close to the limit. I was in a conversation yesterday with the leadership team at the British Business Bank. They're openly acknowledging this too. We've got hints that the next tranche is to be announced soon. We hope that it's right, and we're certainly pushing hard for that to be the case.
Okay, well, we are kind of getting to the end, so maybe I can have time here for a final question. And there were several questions regarding the size of the market, of the UK market compared to the US, and of course they are different markets, but whether the association is doing any actions to attract more money into the UK for venture capital and private equity.
The association as such, I mean, we promote every year our investment activity report. We're actually finalising the one that looks at activity from last year at the moment, and that will be published before too long. Our role is interesting. Most of our members are very, very strong at going out and promoting themselves and doing the fundraising, so we don't have a formal role in that. But we are very much linking ourselves to government, the Department for International Trade and others to ensure that we are part of the promotional efforts, and we help to set the scene to make the UK an attractive place to be. There are a whole range of issues for that. I mean, there's the specific investment proposition is ultimately what will attract the foreign capital or not, but making the UK a place to create funds, manage funds, and reinforce the fact that outside the United States, we are the next largest hub of private equity and venture capital expertise anywhere in the globe. To keep that position, particularly after Brexit, we need to get support from government, and we are making that case repeatedly. But just earlier in the year, we were in the United States with a delegation of private equity businesses, and also in the Middle East, meeting institutional investors in these two very different sets of markets, and working with the UK government to promote and attract more investment into these UK funds. I am confident that not just because of London and the Southeast, but because of what we've got across the UK, our expertise in this particular sector, not just our investment activity, will be critical, and it will continue to be attractive. We have, of course, a number of hurdles to negotiate, including Brexit, but the depth and breadth of experience and expertise and the funding that's available here is strong, and we intend to maintain that.
We have 2 minutes left. Any final comment or any tip for those people that want to get in the industry, which is kind of 75% of the people listening to us?
Well, look, I don't want to be too many platitudes about it, but it's not a bad start to be working with LBS and studying here if you're already there or thinking about it. I think that getting the right academic background was hugely important, and then working on the networking and the propositions that, as we discussed earlier, is key. We want to continue to be the very attractive place to go and work that you clearly feel it is, and we hope that working with LBS and others over the years will continue to provide the insights that get you prepared for a really fascinating and successful career. I wish all the students and others who participated today all the best with your studies and with your careers as they develop.
Well, Michael, thank you very much for being here today, and it's very, very insightful session. I think we touched in a lot of relevant topics, not only for the private equity and venture capital industry, but in general for businesses, like diversity or, for example, the purpose and social values, but also what is happening with the pandemic. So thank you. I hope that we continue working together and that we can collaborate to make this sector, not only in the UK, but in Europe and in the world, a bigger and a better sector at the same time. So thank you for joining us.
Thank you.
Thank you. Goodbye to everyone.
Cheerio.